Hey, Desert Peaks investors, Sam Newell here. Just wanted to update you on how we're doing. We're really excited with Desert Peaks and how well it's doing. We've been hovering at 96 to 98% occupancy for over the last year. The El Paso market's doing very well, and our leasing agent and our on-site team is doing very well also. So makes it really nice. You can just pay for all the expenses, the maintenance that comes up, much easier when you're cash flowing that well. So they're doing fantastic on collections. Delinquency is way down. Um, I just can't say enough about the on-site team. So Michael and I are on every single week with them. We really hold their feet to the fire, but we like them because they make it easy to do that. We're very uh, intentional with what we ask of them, what we track. Obviously, you guys have access to those weekly trackers, and they're doing great. So, I've been holding my breath with immigration and different things that's going on. Our tenant base is, high percentage Latino, which we love. They're actually fantastic tenants. We love them very much. But been kind of watching what the different immigration laws would do to that market. So far, everything's been fantastic. So we're really excited about Desert Peaks. Terrace Hill has been struggling a little bit with occupancy in the mid 90s to, well, under 95%. We've been hovering around 90, 92. We just got back over 95. So Terrace Hill is a nicer property, about just a little bit newer than Desert Peaks. It's bigger. Rents are a little bit higher. So that Desert Peaks affordability price point is working out really well for us. Lucky for us, maintenance has not been too crazy. We do have shingles and entire roofs on a few buildings that need to be replaced, but so far they're holding out. We've been able to do minor repairs here and there, and we're just waiting to do those until we have enough money saved in the bank. So every month, we're just putting some money away. So want to keep this short and sweet. We're very happy with our on-site team. Very happy with how the asset is performing. Very happy with the amount of maintenance we've had to do. The first couple of years were really, really heavy. I mean, complete turnaround. We really raised Desert Peaks from a C class to a B, B minus. Um, and it's worked out. It's worked out very well. It's a very desirable property now, and we're very happy with it. I can't say that enough. It's music to my ears every week when we get on the call and we're at 98, 96% occupancy. Anything over 95 makes it just so much easier. So that's great. And if you have any questions, let us know. You should have received your quarterly distribution from Q4 just a week ago. If you have any questions about that, let me know. We do expect distributions to continue in that 5% range. But just a heads up, if the roof does get blown off by another windstorm, we will have to probably pause distributions for a couple of quarters, just like we did at Meadow Creek, to take care of that big ticket item. Roofs are not cheap. And that's always to be expected when you own these type of assets. They're older. You're just going to have to repair roofs, repair sewer mains, water mains, things like that. And all of that has popped up on this property over the last few years. So right now, we're doing good and we're saving for those. Terrace Hill, exact same story, but this last year we had a huge amount of maintenance that we had to do and bank required items. The bank actually required us to spend over 300,000 just on the parking lot. So that hurt our savings account. And we're pretty frustrated with how much they required because it really didn't need all of it, but now it doesn't need it for another 10 years plus. And that's great. If we do go to sell either of these assets in the next year or two, we've done really fantastic upgrades. We've brought them up to the next level and we're continuing to do so. Harris Hill, on the other hand, though, has had more. So we've had boilers go out, we've had hot water mains go out multiple times. The plumbing bills are very high. There's just been a lot. And so we are pausing distributions on Terrace Hill to pay for those items. We also have amortization starting on that loan. So we were paying interest only. And so we do need to build up that reserve again. So we're pausing distributions at Terrace Hill for the foreseeable future. It's been pumping out cash flow really well these first few years. And we kind of flip-flopped. Desert Peaks was really, really heavy. We spent over $1 million the first 2 years remodeling, re-roofing, all of those things. And Terrace Hill didn't need a whole lot other than unit upgrades the first couple of years. We flip-flopped, and now this last year we've spent almost $1 million on Terrace Hill between upgrades, between roof repairs, between um, you know the the wall that we had to build. the retaining wall, the parking lot resurface. We found out the parking lot was installed incorrectly, so that actually cost us more money. Luckily, we had it, and luckily, it's been cash flowing very, very well. So that monthly mortgage payment is going up by 20,000 a month. And for the foreseeable future, we are going to pause those distributions. So it's the wise thing to do. It's the responsible thing to do. And as soon as we have that nest egg or that rainy day fund built back up, so that if large repairs do come happen again, that we'll have that money to pay for it. So that's the status update for Desert Peaks for Terrace Hill. Terrace Hill is back over 95% occupied. We love the on-site staff. George and Laura. Those are our main people there. They're doing fantastic. No complaints other than we're pausing distributions and need to be responsible asset owners and investors to make sure that money is set aside. So some things you can't foresee. I'm just glad that we had the $1 million plus in the bank already to pay for these really big ticket items at Terrace Hill. And we're going to start building that back up. As far as selling these assets, we're at a low. So the whole country is at a low for commercial real estate. That's because of interest rates, inflation, the economy. No matter what news agency you like to subscribe to or where you get your information, the numbers don't lie. And so occupancy is down in most markets. Expenses are high. And it's been a struggle. It's been a struggle in Dallas, Cleveland. Many other locations are struggling. We're very grateful for how despite the big repairs in Dallas and El Paso, how those assets are performing. It's not a good time to sell though. And so values are down as well. At one point in Terrace Hill, we're up at the $33 million value, with just around 30 million, which doesn't produce an amazing return, So we're happy with the asset. We're going to hold on to it until we can really hit a good ROI. Desert Peaks, we have 3 years of interest only left on that loan. We have 6 years left on the loan total. And so we're going to hold on to that one as well until we can replace it with just as good of an asset. And most importantly, until we can sell and hit 15% plus. We'd love to hit 20% ROI for our investors, just like we did in Bradenton, Florida, just like we did in Albuquerque with that asset. And so that's the goal, and that's the vision that we have. Please reach out if you have any questions. Texting me is better, and I'll get back to you. Happy to talk with you. But you should have received your distribution for Desert Peaks, and we will let you know once that nest egg is built back up and we can start distributions again for Terrace Hill. Thank you.